Hi everyone, so welcome to Investing for Value. So I've got another stock on demand. This is Aurora Cannabis going under the ticker symbol ACB. So it just recently released the Q2 revenues, and it showed not much growth for 3 months. For the 6 month, the growth was pretty good. But so far we're looking at the short-term focus of this company because they're creating quite a lot of losses. Like when you're losing like basically twice the amount of money than you're making in revenues, let alone not even counting you getting near profitability. It's quite a worrying situation for this company, especially since they're not expecting any growth in Q3. And this is a company that is dramatically trying to reduce costs, laying off 500 people just to save $100 million. But if we look at here, the 6 month loss was close to 200 million revenue. So, like, if you reduce it by 100, you're still making quite a lot of losses, particularly if you're experiencing barely any growth. See, look here, it was about 59 going to 63 million, so not a lot of growth. And if they don't expect to grow in Q3, it's a kind of worrying situation, particularly now that they've also written off like some of the assets that they acquire. They acquire a lot of assets, which didn't really lead the company any further along. So they're having to write it down. Like in goodwill, it's about 740 to 700 million revenue, not revenue, goodwill that they had to write off. And in 190 million in intangibles that they had to write off. So in quarter two, the accounting figures actually show about $1.3 billion in losses. But I choose to focus on the operational losses because that's the real money hitting out the door. And in terms of the money that they're holding about $200 million. But they've also got a debt on the balance sheet of $570 million. So by no means is this company looking really bright. Firstly, you're not growing, you're making quite a lot of losses. The cash in your bank's going to last you another maybe 6 months, but if you reduce your losses by 100 million, maybe it might last you close to a year, though you've got a debt obligation of $570 million. So, like, originally, cannabis companies look like a really good idea because you produce a product for less than $1 a gram, but you can sell it for over 550 a gram, which is it sounds like a really good business. So I took this quote from one of the analysts, and it's basically optimism around the growth and profitability created an organization with a bloated cost structure. And I think that ultimately sums up most of the cannabis companies. So it doesn't look that great for the industry right now, particularly when there's not a lot of demand. So the problem with this whole industry was originally everyone was thinking the product's cheap to produce and we can sell it for a lot of money. That should make a lot of profits. But then there was so much competition, and it also meant a lot of supply, and there's not enough people using the products. So that's the ultimate problem. There's not enough demand. So and in these companies basically built this really high cost structure that doesn't make economic sense. So in terms of that, you're looking at a company with $1.48 in share price and 1.68 billion in market value. Um, so overall, quite expensive for a company like this, even though the share price has dropped a lot. Unless they've got a lot of good deals coming through, it's hard to see where they're stemming the losses. I'd like, the one thing that they do have control over is the expense structure. So the things you're looking out for is them reducing the expenses, and them trying to find contracts worth hundreds of $1 million of contracts, because if you can't find those contracts, you're not reducing your losses in anytime soon. You don't have much cash in the bank to keep you going. So ultimately, even though the price of the stocks dropped so much, like we used to look at this company and it was closer to like $10 billion, but the thing is, things haven't gone as um, brightly for this company. So in terms of like recommendations, I do not recommend buying this company, not exactly at this moment. Though that's just my opinion. You might have yours. You might see a reason why they might be doing well, but currently I do not see where the growth is coming from. And I don't see like how they're getting out of things right now. So like either this company is able to raise a lot of money, reduce the cost structure, and find a lot of growth, or this company risks going bankrupt basically because it's not a good situation to be in. Even like trying to get through this year might be quite tough. So currently they have an interim CEO and are looking for a permanent one. So until they find a CEO, like you don't really have a really steady ship as well to just like point this into the right direction. So in terms of that, yeah, I can't say I would give a certain value right now, but I can say it's definitely not worth $1.68 billion. Just because like in most cases, when you have a company that grows, you look at it and go, okay, it can just grow, and eventually it can eliminate losses through growth. But if you're not growing, then how are you going to stem your losses? You can't like fire everyone. Like they've already got a 500-person layoff. They're going to really have to push for another 500-person layoff, and still they wouldn't be on a, like they still wouldn't be anywhere close to profitability. And they're already below $1 per gram to grow their product, so I don't think they can lower their costs in terms of growing the product unless the price increases higher from over 5.50 to maybe $6 or $7. I don't see where revenues are going to increase and margins are going to get better, particularly in this current industry where supplies is really high because everyone's producing a lot of product, and no one's really, no one's able to really get really good pricing. So maybe you're looking at like more countries legalizing this product, and then consumers buying more. But currently, it's not. There's just not enough demand for this product, and means for this company, there's not enough growth coming through, that it means anything significant currently. Yeah, so I think what kind of attracts a lot of people to the stock is everyone's kind of viewing this as like the new hot industry. Since a few years ago, everyone got really hyped up on this stock, hyped up in the whole industry because everyone thought this was like a big opportunity. That if you legalize the product, there's going to be a lot of users, and this company is going to make more money than they know how to spend. But the true reality is, not everyone's legalized, and there's not enough people really buying this product. So that's the thing. There's only so much someone can smoke, and that's yeah. I don't think it. I don't think there's really any current situation that's getting this company out of all the trouble it's in right now. Though we can assess it as it goes, we can look at Q3, and since they're not expecting any growth, we're going to be looking at them trying to stem their losses. And the minute if we see the losses start to go down, we have to continue to look at the cash that they hold, as well as the debt situation that they're currently in right now. Like about 27 million of it's just in the current 12 months, whereas the other 540 million is in a long-term loan. So like the debt's not necessarily the most worrying situation. The most worrying situation is the losses that just keep coming in with this company. Unless they manage to raise like another 500 or $1 billion. Though if you're trading around 1.6 billion, it's hard to see where someone's going to want to put another $1 billion into this company. So the best chance is raising another few hundred million to keep them going for another 12 months or so, and then try to just get out of try to find a situation that works for them. Until then, yeah, I don't recommend buying this company at all. Even though the values drop significantly, and it looks at on a historical basis, it might look like a bargain, but on a current situation, yeah, like I definitely can't see it being anything worthwhile to get into, particularly if there's no growth. If there's no growth, it's a deal killer. Like you're losing money and not growing. So that really just puts in a bad situation. Until then, good luck investing, everyone.